Malayan Flour Mills said the recent decision by the Malaysia Competition Commission regarding an alleged price-fixing infringement with the imposition of a 70.02 million financial penalty on its 51% owned joint venture unit is without merit. The group and the JV unit, Dinding's Poultry Development Centre, strongly challenge MyCC's finding of the said infringement, are in consultation with an external legal counsel to take the necessary and appropriate action to appeal the decision and apply for a stay of decision in the interim, according to its Boxing Day boss filing. Dinding's Poultry is directed to cease and desist from participating and engaging in the anti-competitive agreement in relation to any discussion on price-related matters on poultry feed and to submit a monthly report on changes in poultry feed prices. MyCC also required Dinding's Poultry to review and enhance its existing competition law compliance training program and to enroll all employees and board members involved directly in pricing determination of poultry feed price in such a program. To recap, MyCC had investigated Dinding's Poultry and 4 other feed millers for allegedly colluding in a chicken feed cartel. The total penalties imposed on the 5 companies amounted to 415.5 million, the largest amount that the quasi-judicial body has ever imposed in its 12-year history. MFM joins PPP Group, who last Friday said its subsidiary FFM will similarly challenge MyCC's findings on the price-fixing infringement. The widening of targeted subsidies through the removal of rebates for high electricity consumers will indirectly lead to a reduction in the imbalance cost pass-through receivables for Tenaga Nasional in the first half of 2024, says TA Securities Holdings. In a note, TA Securities stated that the expected continuous drop in ICPT receivables will improve TNB's cash flow and potentially lead to higher dividend payment. TA Securities said the latest announcement of the tariff revision does not come as a surprise, as this was already announced in Budget 2024 and is expected to have a neutral impact on TNB's earnings for FY 2024. The research firm reiterated its buy call on the stock with an unchanged target price of 11 ringgit. Public IB Research, which has an outperform call on TNB with an unchanged target price of 11 ringgit 50, views the ICPT implementation having a neutral impact on the national utility in tandem with downtrending fuel cost. According to the Energy Commission, about 85% of domestic users are unaffected by the new tariff and 99% of domestic users are still receiving subsidies from the government. Independent advisor BDO Capital Consultants recommended that shareholders of Ajiya accept the unconditional voluntary takeover bid by Chin Hin Group and other joint offerers, deeming the offer price of 1 ringgit 53 per share as not fair but reasonable. In a circular note, BDO Capital said the offer price is unfair as it represents a discount of 40 cent or 20.73% for each Ajiya share based on revalued net asset value approach. However, it deemed the offer as reasonable, especially for those holding a significant number of Ajiya shares, considering it provides an opportunity to realize their investments. According to BDO, holders who wish to exit their investments can also consider selling Ajiya shares in the open market if they are able to obtain a price higher than the offer price. Chin Hin first emerged as a substantial shareholder in Ajiya in March 2022 with a 24.68% stake as it sought to expand its building materials division. It also intends to maintain Ajiya's listing status after the MGO, which values Ajiya at 466 million ringgit. Shares in Chin Hin closed 0.81% higher on Boxing Day to 3 ringgit 75, giving it a market capitalization of 6.64 billion ringgit. Ajiya shares ended the day unchanged at 1 ringgit 52, giving it a market capitalization of 462.97 million ringgit. Focus Point Holdings is eyeing to increase the contribution of its F&B segment to group revenue over the next 2 years, according to a Bernama report. To recap, Focus Point ventured into the F&B sector in 2012 via Komogi, a premium Japanese bakery. President and CEO Datuk Liao Chun Liang said, with the ratio of optical to FB revenue at 80-20 currently, he said there are more opportunities to grow the segment. He sees the shift to eventually work out to around 60-40. On its plans, Liao Liao explained that the group had clear goals for both its optical and F&B businesses. Focus Point is strengthening its optical presence based on multiple demographic segments and also recently launched Focus Point Sightsavers, which is targeted at smaller second and third tier cities such as Taiping and Muar. Regarding capital expenditure, Liao said Focus Point designates around 12 to 13 million for the optical segment and is looking to open between 10 and 15 new outlets for the segment next year. As for Kumogi, he said 6 million to 7 million is specifically set aside for the outlets. Malaysia Airports Holdings saw a 22.3% year-on-year increase in passenger movement in both its Malaysian and Turkish airport network, reaching 9.6 million passengers in November. In its monthly passenger traffic snapshot to Bursa Malaysia, MAHB disclosed that Malaysia accounted for 6.6 million passengers, while the remaining 3 million came from the Istanbul Sabiha Gökçen International Airport. Local airports in Malaysia registered 3.4 million passengers for international sectors and 3.9 million for domestic sectors in November, despite the off-peak travel season and minor structural changes in the domestic landscape.